Hey everybody, Smart Silver Stacker here. Hope you're doing well. So in today's video, we're not going to talk too much about silver. Instead, as you might have guessed from what you see on the screen here, we're going to be focusing on gold. The gold price has been on an absolute rip. The price of gold has risen more than 40% over the past year. And that would be impressive for any asset, but when an asset like gold, that's supposed to be the ultimate stable store of value, starts moving by more than 40% in 1 year, you really should pay attention to that. And many of you watching, you might be new stackers. You might be thinking of buying your first gold bar or your first gold coin. Watch this video first, because I'm going to share with you some information that you really should be aware of if you are buying physical gold bullion. Some things that you might not think about with other types of investments. And if you're a seasoned stacker and you know all the basics, there'll be something in this one for you as well. We'll cover some more obscure facts about gold and silver stacking. Now, what this video isn't is a comprehensive overview, everything you need to know about stacking gold. It's not that. It's just me sharing some information that I wish I had known before I got started in stacking gold. Remember, you can buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. And don't worry, if you're not sure what spot prices or what premiums are, we'll delve into that in today's video. But first, let's just talk about the gold price. Is now a good time to be stacking gold with the price up 40% plus over the past year? Usually something moves up that quickly in such a short period of time, you might think that you've kind of missed your opportunity to get in, and that now gold could even be set up for a bit of a decline. You know, when something runs up that quickly, you might expect it to become overbought, you might expect it to drop, and certainly that is a risk. Anytime you're investing in anything, you know, it could go down. But one of the things about gold is really you should view this as a long-term holding. This is not something you're trying to buy and flip to make a couple of bucks or even to make, 40% return. I know I've bought all this gold at much lower spot prices than we have today. I'm not thinking of selling any of it. In fact, I'm still thinking about adding more gold to my stack. Now, the reason for that, despite the fact that gold has risen dramatically. I mean, every time you look at the chart, it seems these days it's taking out new record all-time highs. There's still, I believe, a lot of room to run. Now, the fundamentals, we talk about that on this channel all the time. Gold has got a lot of good things going for it right now. For one thing, the Federal Reserve did just cut interest rates with gold at a record all-time high. Now, in the past, since 1971, when Richard Nixon took us off of the gold standard, that's when he ended the convertibility of the dollar into gold.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The Federal Reserve has never actually done that. They've never cut rates with gold at record all-time high prices. So that's one reason that I think we're going to see the gold price continue to move higher. Not to mention China just announced a huge amount of stimulus. The U.S. is running enormous deficits. In August, we had a $380 billion deficit. So there's a lot of indications that with all the inflation and money creation that we're witnessing, gold is probably going to continue higher, even if it's not a straight line. You know, it might go down, then it'll go up. If it dips, that'll be a good buying opportunity. Just my opinion. You know, I don't give financial advice. The geopolitical situation in the world, as unstable as it is also a big contributing factor to gold's rise over the past months, the past year. We seem to be closer to World War III now than at any time in my memory, at least. And so, gold is sort of a hedge against geopolitical risk. So it's got that going for it as well. But another big factor is that even though gold is at a nominal record all-time high price, meaning, in name, the price has never been above $2,600 like it is today. Still, there are previous highs that, if you adjust them for inflation, put the gold price much higher. The 1980 high, for example, in January of 1980, the gold price hit $850. Now, if you adjust that for inflation, even using the underreported inflation numbers from the government, it gives you a gold price north of $3,400. You still need, almost $800 more to hit that record all-time high when adjusted for inflation. So even just based on historical highs, and in 1980, the factors that were driving gold to its record all-time high were kind of similar to what we have today. You had geopolitical instability. The Soviet Union had just invaded Afghanistan, and you were coming off of the 1970s, a highly inflationary decade. There was a lot of deficit spending, huge expansion of the government debt. Of course, that was what caused the end of gold convertibility in 1971 in the first place. You had the Great Society under Lyndon Johnson and the Vietnam War. It was just a ton of government spending and debt creation. So, the situation was similar to what we're witnessing today, except now all of those factors are just magnified. I mean, the geopolitical tensions are higher even than at that time, at least by my measure, and the debts and deficits are just orders of magnitude greater than they were in 1980. So there's no reason to think that we won't take out that inflation-adjusted all-time high. And in fact, due to the fact that the inflation numbers greatly understate the actual amount of inflation, I think that we'll see much higher gold prices even than that moving forward. So, is now the perfect time to buy gold with it having run up so much over the past year? Not necessarily, but I do think it's a good time, and there are a lot of factors that in the long run are going to support higher gold prices. Now, that being said, let's get into some of the individual types of bullion that you might consider stacking. So for me, really the gold standard, so to speak, no pun intended, is a 1 ounce generic gold bullion bar. You can see this is one from Valcambi. This is 4 nines fine. You can see 999.9. So that means it's just very pure gold. It's got a serial number on it. It comes in this assay card. Now, assay cards are not necessarily the best thing in the world, especially when you go to resell your gold. It's important to note that can make it a little more difficult for whoever's buying it to verify its authenticity. But as long as you're buying from a reputable dealer, what you're getting there is gold. And gold products like this, generic gold bars, are oftentimes going to be the lowest premium gold that you can find at any given time. Now, there's exceptions to that, of course, but as a general rule, this is going to be very affordable. You're not going to pay much over spot price, and you don't want to overthink it too much. I mean, gold is gold at the end of the day. Before we go any further, let's talk about what premiums actually are. So you're going to hear that word a lot. You're going to hear spot price. So spot price is actually the price of gold on the paper futures market. So at the COMEX or some other paper market maker. And when you buy a physical bullion product like a gold bar or a gold coin, you're actually going to pay more than the spot price. And that difference is referred to as the premium. One of the things you have to understand about premiums is that for bigger gold products, heavier gold products, you're going to pay a lower premium. And this is the same with silver. So if you're a silver stacker, you should be familiar with this. Now, I don't have any huge gold products in front of you here. I don't own any. But let's say you have like a 1 kilogram gold bar. That's going to probably be your lowest premium gold product. And then your higher premium products are going to be your smaller fractional gold products, like this 1/10 ounce gold coin. Now, the reason for that is that with the production of any gold bullion product, there is a fixed cost. At the mint, they have to pay a certain amount in terms of their energy, their equipment, their staff. All these expenses goes into one gold bullion product. So producing a 1 ounce gold bar is going to cost roughly the same as a 1/10 ounce gold coin. So therefore, producing 10 of these smaller bullion products is going to cost more than just making one ounce gold bar. So these smaller products tend to have a higher premium. That's just sort of a rule you need to keep in mind when you're stacking physical gold bullion. Now, the difference between, say, a generic 1 ounce bar and what we might call a gold coin, like this 1 ounce Britannia here, this is from the UK Royal Mint, is that this is actually made by a government mint. It is not made by a private mint like this one from Valcambi. Now, there's also older gold coins like this 1924 Double Eagle St. Gaudens coin. This is a pre-1933 U.S. gold coin. And back in the day, the U.S. dollar actually used to be as good as gold. You can see this coin was worth $20 back in the day. Now, today, it's worth, I don't know, $2,600, something like that. That coin doesn't have quite 1 ounce. That's one thing you'll notice with the older pre-1933 gold coins is it doesn't come in the nice easy to think of units like 1/10 ounce of gold. It's a little bit different. I think this has 0.965. Probably should have looked that up before I made the video, but something like that in terms of its actual gold content. So, you got to keep an eye out with those older gold bullion products. They're going to be in like weird units. Same thing with these 20 franc French gold coins. So these are similar to the pre-1933 gold. These are old European gold coins, and you can see if I can get the camera to focus here on the date. This is a coin dating back to 1877, and at that time, the whole of Europe was basically on what you would call the classical gold standard. So there's a lot of these circulated gold coins from France and Switzerland, other European countries of the time. These two are not pure gold, and they're on kind of an oddball measurement. I think this one has 0.1867 troy ounces of physical gold, and it's 90% pure. So that's something to think about as well. Now, one thing I will say about the fractional gold products is, yes, you do need to watch out when you're buying the smaller products. There may be a higher premium associated with them. So for example, this 10-gram bar compared to a 1-ounce gold bar. This is almost exactly the same thing in terms of what it is. It's a generic gold bar. There's nothing collectible or special about this. This one's from Valcambi. This one's from Arger Heraeus, but gold is gold. You got to keep that in mind. So when you buy this 10-gram gold bar, though, typically you're going to be paying a higher price per ounce than with the 1-ounce gold bullion product because of those premiums. But this bar, I didn't pay a high premium for it. I actually bought it on sale on a Black Friday. I believe it was SD Bullion had a spot deal where you could pick this up for spot price, no markup over spot. Now, if you can get deals like that, then you want to take the fractional gold product pretty much every time, because if you can get smaller, more divisible units of gold, it's easier to sell them. You don't have to sell your gold all at once. If I've got let's say 3 of these and 1 of these, that's a rough equivalency. Troy ounce is a little more than 31 grams, but let's just say, if you've got 3 of these, it's much easier to sell one at a time than your 1-ounce gold bar, which you have to sell all in one shot. So there is a balance to be found between your fractional gold products and your full-size stuff. But as a general rule, you want to stay away from the smaller, more fractional bullion products because you're going to get eaten up with premium. As far as gold coins go, this is a 1/4 ounce gold coin from the Perth Mint. This is typically about as small of a fractional coin as I'm going to want to get, 1/4 ounce. Again, that could be different if you find specials. But these 1/10 ounce gold coins, you're going to be paying a very high premium over spot. So unless you get a spot deal or you just find someone who's desperate to sell them and is willing to sell them at or close to spot, I'd probably stay away from those. And if you're a new stacker, it might be worthwhile to save up for a bigger gold product like a 1-ounce gold coin, or maybe even something like the St. Gaudens. Now, let me talk about these real briefly, the pre-1933 coins and premiums. So in the past, you can see this is a slabbed coin. It's an MS65. The highest, I think, is MS70. I don't know too much about numismatics, but these things were, for a long time, selling for much higher than spot, big markups, because they have like a collectible numismatic type value. And when I bought this, I paid about 5% over spot. Now, the reason is because as gold prices have risen so much, the premiums on a lot of these collectible pre-1933 coins have come way down. In the past, you might have paid, 20, 30, 40% over spot for a coin like this. But today the premiums have come down quite a bit. Now, some of that has to do with the fact that spot price has risen so much. It also has to do with the fact that the older generation of gold stackers, as they pass away and their collections and their estates get liquidated, they put more of a premium maybe on collectible type coins, whereas a lot of them stackers today, I think, are just focused on getting the most metal for their money. Now, that could change in the future. It's something to think about. If you can get one of these for, say, 5 or 6% over spot, and say a generic 1-ounce bar is trading for about 1 to 2% over spot, you might think it's worth it to pick up the more collectible coin. I picked this one up just because I couldn't believe how much the premiums had actually come down. So, that's something to think about as well. These modern bullion coins like the Britannias, these I don't think are going to have much numismatic value anytime soon. They're basically just bullion. But if you kind of want to get some exposure to numismatics, but also want to have a good amount of gold, the pre-1933 gold coins are looking more favorable these days than in the past. And same goes for these older European coins. You know, these are typically, you can find these for a fairly low premium these days. Only so many of these were minted. They were minted a long time ago. You can see this one's from 1895. So it is possible that those could become a little bit more collectible in the future. And since the premiums are low right now, it might be a good idea to consider stacking some of those. You can kind of see what my thoughts on stacking are based on what you see in front of you here. This is just sort of a representation of the kind of gold products that I personally like. Another form of gold that you might not think of as bullion, but you might consider stacking, is jewelry. So gold jewelry, there's a lot to be said for it. These are actually 24 karat gold, so you can see they kind of fit and form to the wearer's hand. SD Bullion has a line, it's called a SD 24 karat gold jewelry. And one of the advantages of gold jewelry is that, you can put this on your finger, or say you have a necklace or something like that. You can wear it fairly discreetly, and you can be carrying around a lot of wealth with you, especially with gold sitting at record all-time high prices. And, maybe you're leaving the country. Maybe you are having an emergency. Who knows? I think something like a piece of gold jewelry is going to attract a lot less attention if you're traveling with it than, say, some gold coins or some gold bars. And it may even be that the laws in your area treat jewelry differently than other forms of bullion. So these are something to think about stacking. Probably not what you want to have making up the bulk of your stack, because the premiums for jewelry are going to be a bit higher than for these other products. It is something to consider. And hey, if you got to get somebody a gift, then why not get them some gold bullion, for the married stackers out there, for your wife or your husband. You can always get them some nice gold jewelry. It's a wonderful, gift to give somebody, and it's something that is going to hold its value and potentially even appreciate over time. So that's a lesser known form of bullion that you might want to think about. One other form of bullion that I want to get into today a little bit is the Goldback. These are a gold currency that actually circulates in 5 US states. These are called Goldbacks. They're these physical gold notes. You can see they've got this pattern on the back. It's like a security feature. And this is one form of bullion that I actually don't mind paying higher premiums for. One of the reasons is that, let's say you stack a 1/10 ounce gold coin. So this has a fairly significant premium over spot. Let's say spot gold is $2,600. You might get one of these for $290. So you're paying $2,900 per ounce if you buy one of these. And that's just an example, but I think that's kind of in the ballpark of what premiums are like on these right now. Now, if you go to your coin shop or an online dealer and you buy one of these for $290, let's say, and spot is $2,600, if you go right back the next day and say spot price hasn't changed and you want to sell it, you're probably just going to get spot or somewhere close. So you took a big haircut just by buying this higher premium fractional gold coin. Now, Goldbacks being extremely fractional, it's 1/1000th of a troy ounce per note, so it's about as fractional as you can get. It's pretty amazing the technology that actually goes into these. But the thing about these is you're going to pay about twice the spot price of gold. So if gold is $2,600, you're going to pay about $5.12 for a single Goldback note. But the difference is that if you go to sell it the next day, you're going to recapture all of that premium. And that goes if you're selling it on the secondary market, say like on eBay. You just go on there and look at the completed sales, and these are going to be selling for basically the same price that you get them from a dealer for, about twice the price of gold. And the other thing is that there's actually a specific service, the UPMA. You can visit them at upma.org, that offers these with a 0% bid-ask spread. So that means that if they're selling them to you for $5.12, let's say, then they're going to buy them back for $5.12. There is absolutely no spread between the bid and the ask price. So I feel much more comfortable paying the high premium for these, knowing that I can recapture it when I sell them. And there's a few interesting things you can do with Goldbacks that you can't do with your more traditional gold bullion products. And one of those is that at upma.org, you can buy these and keep them in an account where they will give you free storage for your Goldbacks. On top of that, one of the features at UPMA that I utilize is that you can actually put these into what's called a Goldback lease, and you will earn interest on your Goldbacks paid in gold. So you earn somewhere between 2 and 3.5% based on the number of Goldbacks that you have. But that is a very unique feature of Goldbacks, that you can actually earn interest paid in gold. So not only do they appreciate along with the spot price of gold, but you get paid in Goldbacks just to store them there. Now, that's not for everybody, but if you ask me, one of the things that you need to do with your physical bullion investments is diversify them. And that means not only buying different forms of bullion, whether that be bars, coins, jewelry, whatever you might stack, but also having a diverse storage solution. So maybe you store some of your bullion at home. I wouldn't put it in a safe deposit box at the bank, because there are implications there if the bank closes. There are private storage options like Brinks, for example. They've been operating vaults for like a century plus. I don't think they've ever had any problems. SD Bullion actually offers an SD Bullion depository program where they'll store your gold for you for a very low fee. And then places like UPMA, the United Precious Metals Association, they will store your gold for you for free if it's in the form of the Goldbacks, and you even get paid in Goldbacks if you go ahead and put your Goldbacks in a lease. Now, you got to go to the site if you're interested in a Goldback lease and read all the information they have there. There are some stipulations. You can't immediately pull out your gold, kind of similar to like a CD at a bank or something along those lines, but you can check that out at upma.org. And I think that that is a worthwhile form of gold bullion to examine, because it does give you some interesting options for diversification. And I can say that pretty good chunk of my gold holdings are tied up there in a Goldback lease, earning interest paid in gold. But that is it for today, everyone. I hope that this was helpful, kind of some of the differences between the gold bars, gold coins, premiums, different ways to diversify your gold stack. I'd love for you to leave me a comment down below. What do you think about these different types of bullion? Do you think that now is a good time to be stacking gold? What do you think is ahead for us with gold prices? Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.